Hey everyone, welcome back to Chip Stock Investor. Today we are just doing a brief update based on some news that Micron released yesterday, a very important update from the big memory chip maker. And we're going to talk about one company that we like more than Micron.
So Kasey, Micron actually provided this nice little chart here for us. So we're just going to reuse it and we're showing it to you on screen right now. So just about a month ago, when Micron reported its last earnings report, it gave this guidance indicating that we were going to start getting some sequential growth back in the memory chip market. And quick turnaround here, they are upgrading that guidance. And you can see previously revenue, they were expecting $4.4 billion at the midpoint of guidance. Now they think revenue is going to be approaching $4.7 billion. So well above the previous outlook. From the midpoint, this is a nearly 7% increase in their revenue guidance. Of course, with increasing revenue for a company like Micron, that also means a corresponding increase in operating expenses. So this is the bad news for Micron. So you can see the previous guidance for operating expenses on a GAAP basis, just a skosh over $1 billion expected. Now that's expected to be about $1.1 billion in operating expense. So about a 9% increase in expected operating expenses. And of course, you can also see, most importantly here, the bad news for Micron is even in this rebounding market for memory chips, they still have a long ways to go digging themselves out of this hole. Of course, how did we get here? It all has to do with that really awful PC and smartphone market. We had record sales of consumer electronics in 2020 and 2021 through early 2022. And just as companies like Micron were catching up with this backlog of orders, they got their supply caught up. What happened the second half of 2022? Well, all of that elevated consumer electronic spending fell off a cliff. So one of the worst downturns for the memory market in about 2 decades, since basically the dot-com bubble popped. And fast forward to today, this is, we would argue, much worse because electronics, the digital economy, is far more important today than it was 20 plus years ago. So this has been a rough go for Micron. Good news, it looks like they have confirmed we are getting a really nice rebound in PC and smartphone sales headed in to 2024. The bad news is Micron's still very much losing a lot of money.
We'll just show you for your reference a chart here from our friends at Main Street Data over the last 10 years for Micron. When I look at this chart, it reminds me very much of the Six Flags roller coaster Colossus, up and down. And in the last 5 quarters, you can see that it's mostly been a huge fall off from that peak in 2022. But in the last quarter, we did see a slight rebound. And as Nick mentioned, with this new updated guidance, we should continue to see a slight increase in coming quarters. And again, another chart showing the year-to-date stock price of Micron up about 50%. With that 50% increase, we think that most of the rebound that we expect next year is priced in at this point.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this.
So that brings us to the memory chip company that we like better, SiliconMotion. Now, you may have remembered we've covered SiliconMotion a couple times, mostly in the context of its merger or potential merger with MaxLinear. And the rug got pulled out from under SiliconMotion just recently, and that merger has completely fallen through. So now we're going to be looking at this company through the lens on its own merits.
Exactly. And it deserves to be considered on its own merits, Kasey. We are actually SiliconMotion shareholders. We started buying last year rather than MaxLinear. We liked the financials and we liked the business model of SiliconMotion better. Our thinking was, even if the merger falls through with MaxLinear, which it did, we were still going to be happy as standalone SiliconMotion shareholders, which is where we find ourselves today. Maybe just a brief recap here, Kasey. Using your semiconductor flowchart, this is actually not a memory chip manufacturer. It is actually a fabless chip designer. It's a chip engineer. And specifically, rather than designing memory chips themselves, they make a very critical component called a memory chip controller. They make flash memory chip controllers. So flash memory is a type of primarily long-term memory chip for PCs and smartphones. And this is, you can think of it as like an application-specific type of CPU that controls pulling data out of long-term memory and sending it to the PC or smartphone's CPU, central processing unit. So maybe you have your smartphone and there's an app that you want to open. Maybe it's your mobile broker. You click on the app icon and the CPU needs the file stored in long-term memory to open that app for you. So it sends that instruction, but rather than interacting with the long-term memory directly, the CPU sends that request to the memory controller, the flash memory controller. And so that little chip is what actually goes and retrieves the information out of long-term memory and sends it onto the CPU for actual execution. That's very, very high level, but these are the types of chips that SiliconMotion designs. They source their silicon wafers for their chips from Taiwan Semiconductor Manufacturing, and they are a leader in very high performance, low power usage flash memory controllers.
Nick, as we've discussed before, memory chips are a commodity, and there's not a ton of differentiating factors between all of these competitors. And that is one of the reasons why it is such a cyclical business, right? So what makes SiliconMotion different? What differentiates them from their other competitors? Because there's tons of competitors, as we've talked about.
Yeah, this is a great place to start with, Kasey. Competition is very much the primary risk factor to consider for SiliconMotion. As you can see, this is a tiny company. This is part of our basket of small cap stocks, of which we think, is appropriate to have a couple of dozen of these at least, because they can do some wild things. Competition, very much a factor here. There are other small flash memory chip designers that compete with SiliconMotion. I'll rattle off just a couple of them: Realtek, Phison. There's also some bigger ones that are involved in this space as well. Marvell Technology Group, which has really gone after the enterprise market versus the consumer electronics market, where SiliconMotion is currently primarily focused. But in addition to that, they also have to contend with the memory chip makers themselves, your Microns, your Western Digitals, your Samsung Electronics, your SK Hynixes, also developing their own flash memory controllers in-house. We have this chart from Statista here that shows the general breakdown over time of the flash memory market. And these companies are huge. Samsung, obviously one of the largest semiconductor companies in the world, always looking to bring things in-house if they can. Kioxia in there. Western Digital is the gray one. They popped up in the flash memory market back in 2016 when they made the acquisition of SanDisk. Of course, SK Hynix, Micron, of course, a big flash memory maker. All of these companies would love to save the money and develop the flash controllers and pair it up with the flash memory that they manufacture in-house if they can. That's the key risk factor for SiliconMotion.
With that being said, even with all of that competition, there are a few things we really like about SiliconMotion. And the first thing is the rebounding PC and smartphone market. As we've talked about in several videos, this is definitely coming in 2024. And in addition to that, SiliconMotion is also going after that secular growth trend in the auto market and data center flash controllers.
That's right. So yeah, rebounding market. Reason number two that we like SiliconMotion, Kasey, is, they're coming out of an absolutely horrific downturn. Obviously, their, memory controllers are going to get hit along with the memory chips themselves. In addition to that, SiliconMotion had to contend with, as you mentioned, the MaxLinear acquisition, and then the rug getting pulled out from them. Chinese regulators finally approved the deal. A couple of hours later, MaxLinear says, nope, we're not going through with it. And we're also not paying the acquisition termination fee to you. Litigation now ongoing. SiliconMotion claiming that in the last year plus since the merger was announced, some of their customer relationships have kind of been put on hold. Those customers were waiting to see what was going to happen with MaxLinear. Maybe they weren't familiar with who MaxLinear was as a supply partner. So they're rebuilding. Throughout this period, SiliconMotion has remained profitable on all counts. That's a testament to the fabless chip design model that they utilize. But also, we think this is just an exceptionally well-run business. They have a pretty solid track record of balancing growth and profitability on all counts. As you can see from the chart here, in good times and bad, SiliconMotion has done a good job keeping their head above water.
Reason number 3 that we like SiliconMotion is its balance sheet. Squeaky clean balance sheet, no debt, all cash.
Yeah, and this company has utilized some of its profits, some of its cash to repurchase stock in the past. We think as things kind of settle down here in the coming quarters, a stock buyback plan will come back. And that's a nice complement to a little bit of a dividend here. Not a reason why we own SiliconMotion, but basically I think this illustrates this is shareholder friendly business. Even with its very small size in a very competitive market, they found a way to be very shareholder friendly.
We're contemplating nibbling a little bit more on SiliconMotion in 2024, early 2024, but we have not completed our list of top stocks for us personally next year, but we're working on it, so we will let you know as soon as we know what those are. We'll also be discussing our semiconductor industry flowchart a little bit more in depth in a coming video explaining how these companies make money and why we invest in them. Make sure you hit the subscribe button and don't miss a video. Thank you so much for being one of our viewers. We hit that 10,000 sub goal for this year, and we hope that we continue to get more and more subscribers. We appreciate it very much. Take care. We'll see you again soon at Chip Stock Investor.